Alright, this is pretty crazy. Apparently, Spanish authorities are looking for Shakira for allegedly not paying her taxes. But sources say she could be wherever, whenever. Alright, dad jokes aside, something is happening right now that I didn't think would happen in my lifetime, but it's happening as we speak. This is something Ray Dalio talked about earlier this year in one of his videos, which is the changing times of globalization and the birth of a new world reserve currency. This will have a major impact on the global economy and on asset prices like stocks, real estate, crypto, and everything else. So let me explain exactly what's going on. You might have heard of something called the G7 Summit. This is where the world's leading countries with advanced economies come together to talk about nothing short of how to rule the world. Canada, France, Italy, Germany, Japan, the UK, and the US. You can think of this club as sort of like the cool kids club where all the seniors hang out and not everyone is invited, which is why another club was created for all the other kids, the BRICs Summit. Think of this club as the junior varsity edition of the G7 Summit. These countries are Brazil, Russia, India, China, and South Africa. They represent the world's leading developing countries. And last month, at the end of June this year, they came together, and on the topic of discussion for the 14th annual BRICS Summit was the creation of a new monetary system, which means that soon we could be seeing the creation of a new world reserve currency. And the problem with that is that it's going to challenge the global dominance of the US dollar. Now you might be thinking, who cares, Andrei? Other countries don't pose a threat to the dollar, but think about it like this. Together, the BRICS countries represent 31.5% of the world's GDP. And if we consider adding Iran and Argentina into the mix because they're thinking about joining the BRICS countries, that would bump that number up to 33% of the world's GDP, which is all the stuff that the world makes. So the next question is, what's wrong with just using the dollar, and why does any of it even matter? And for that, we have to time travel back to the year 1944. I was there, Gandalf, 3,000 years ago. No, but it was then when we created something called the Bretton Woods Agreement, and that's when we put the dollar at the top as the world reserve currency. It was then when the US made a deal with all the oil-producing countries of the world that countries could only use dollars to buy oil. And that's why by 1945, the petrodollar was born. Now, of course, by 1971, we got off the gold standard and the dollar stopped representing anything. It went from what's called hard money to soft money. But underneath all that, it was still backed by the most important resource of all time, energy. And as long as the world needs oil, it will always need dollars. Now, that sounds indubitably dubious, but what does that actually mean? Here's what it means. It means the US has a special ability to print money. Other countries have that same ability to print their own money supply, but the difference is that the world does not need their money. It needs dollars. And that's why the US can export its own inflation to the rest of the world. But as we've seen this year, printing money comes at the cost of setting 40-year record high inflation numbers every single month. Because when the US prints money, it doesn't just affect inflation here in the US, it also affects inflation in the rest of the world too. Pew Research did a study, for example, on 44 advanced economy countries, and they found that Israel's inflation numbers have 25x'd since the start of 2020. Greece and Italy have almost 20x'd, and on it goes. 37 out of the 44 countries they looked at have an inflation rate at the start of this year that is at least double what it was in 2020, and quadruple for the US. Now sure, supply chains were part of the problem, but not the only problem. It's also something called globalization, which some economists believe is about to change, and we're about to get a new kid on the block with a new world reserve currency. And that will affect all of us. So if that sounds interesting, stick around. I'll help explain exactly what everything means. So with that said, let's get right into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the quick update, and then we'll talk about this new currency. But first, let's get the worst news out of the way because someone won the $1.34 billion jackpot, so we didn't get a chance to win. But hey, we're probably related to that person. Something's stuck in my eye. On the bright side though, the stock market just had one of its best months in the month of July that we haven't seen since November 2020. The downside though is that real estate is not looking as good. The National Association of Realtors just released data on the Home Affordability Index, which has hit a new low that we haven't seen since 2006. And that's mostly thanks to interest rates jumping up to over 5% on the 30-year fixed rate mortgages. And home builder confidence is not looking good either. The National Association of Home Builders just said production bottlenecks, rising home building costs, and high inflation are causing many builders to halt construction because the cost of land, construction, and financing exceeds the market value of the home. And to make things worse, last Thursday, we found out we were in a technical recession, which by the way means 2 negative quarters back to back, where a real recession is where real GDP, real income, employment levels, industrial production levels, and wholesale retail sales are down for a long period of time. Either way, in my last video I showed that 3 out of 5 of them are down if you ask the average consumer, and 3 out of 5 are perfectly normal if you ask the National Bureau of Economic Research, which is supposed to be a private entity that's partially funded by the government. Thank you, Plain Bagel, for that one. At the end of the day, it doesn't really matter what we call it because everything is just fine. On a more serious note though, here's the bigger story. The US economy has been the #1 economy since 1871, but it's estimated that by 2030, China will become the biggest one, and the US will lose its power of using the dollar as an influence. And here's why. It's a concept called globalization, and what it is it's the trade between countries and the dependency on resources of one country on another. And it's both good and bad. It has pros and cons. A pro, for example, is that it gives us things we otherwise wouldn't have access to, like Pokemon, which is arguably the coolest thing that has ever existed, and these delicious cookies. It's also partially why the global economy will reach something like $104 trillion by the end of this year. That's the good thing. The downside though is that some countries can sometimes become too dependent on each other for those essential resources, which is bad when they don't get along. Like for example, Germany being too dependent on Russia for its energy. And that's a problem when one of them says, yes, no more oil for you. That's why inflation in Germany just reached a peak of 8.5%, mostly thanks to energy prices skyrocketing 35% in the last 12 months. So that's the downside of globalization. Economists knew about these things, but the world would never be the same because of what 2020 showed us. 2020 showed the world just how overly sensitive and dependent it was on China for its supply chains. And the horrible conflict that's going on in Ukraine showed the world just how bad it could be to depend on the US for the dollar. And that's because Russia was just cut off from its foreign reserve wallet. It was cut off from SWIFT, the global payment system, which is sort of like PayPal for countries to pay each other. It was cut off from foreign and international banking and from the IMF, the International Monetary Fund. So basically the US told Russia, you are the weakest link. Goodbye. By the way, quick side note, nerdy economists like to debate all the time whether globalization is coming to an end. Sometimes you'll see this chart that's referenced, which is percent trade to GDP. And the easiest way to think about what this means is how important trade is in making money versus a country in terms of how much stuff it puts out. That's all it measures. And it looks as though by this chart that globalization is going down. It's becoming less important. That's a very complicated question and not the scope of this video. And I'm not trying to imply that globalization is coming to an end. It's way too soon to say, but I just wanted to throw that out there for the sake of completion. But regardless of what happens to globalization, more and more countries want the freedom to use currencies that are less dependent on helping the advanced economies advance their economies, if that makes sense. So of course, Bitcoiners like myself are gonna be like the Kool-Aid man bursting through the wall like, oh yeah, plan B is the solution. But it's not about Bitcoin because more than anything, those countries want their own currency. And here's how powerful they're about to become. Check out this data, it's gonna blow your mind. Together, the BRICs team produces roughly 26% of the world's oil supply. Together, they produce 50% of the world's iron ore, which is used to make steel. Together, they produce 40% of the world's supply of corn, which is considered to be the world's most important food crop, and together they produce 46% of the world's wheat. So if and when these countries get together to make this currency, it's going to have a huge impact on the dollar. As of right now, the dollar is perfectly fine as measured by the DXY index, which you can see we're at a 20-year record high. And also because the central bank is increasing interest rates, which means other countries want to park their dollars with us, making it even more stable. And because the world's financial and asset markets are all denominated in dollars is why we're fine, but it's not going to stay like this forever. Some countries are like, I don't want your Chuck E. Cheese tokens or your chicken strips. I'm gonna make my own arcade. Research shows that over the last couple of decades, the influence of the dollar has been slowly going down. In 1999, for example, 70% of the world's reserves were held in US dollars. Today, it's closer to 59%. Now, that means that more countries are holding alternative currencies, according to IMF research. Even our own central bank chairman, Pop Powell, has said that there could be more than one world reserve currency, which has never happened before, so I thought that was interesting. Now, if you've made it this far, I know it sounds scary. I don't think it is, so let me calm you down and share with you my thoughts. First, I want to say that my opinion doesn't matter at all, because I have no idea if this currency will ever get created and when. And even if one does, I have no idea what's going to happen, because this has never happened in the history of modern economics. So there's no data I could show you to base my opinion off of, so I would just have to take a guess, which I don't think is valuable because anyone could take a guess, and I don't want to scare people with my ignorance. So here's what I'll do instead that I think is way more valuable. Here are some fun facts that I want you to remember for the rest of your investing life, courtesy of Brian Feroldi for sharing these. And the first thing I want you to look at is this chart right here, which tracks the last 200 years and shows that the stock market has been the best performing asset class by far when factoring inflation. But unfortunately, the average investor will only make roughly 2% on their money, which is nowhere near what the stock market is capable of. And that's because the average investor will always try to time the market by buying low and trying to sell high because they don't quite understand how investing works. So if you want those sweet, juicy returns of the market, you have to be prepared to deal with some crazy big drops in the market of 30, 40, 50, and sometimes in excess of 80% in some years. But that's how it's supposed to work. And when you average it all out, that's how you win. Now, this next one is my personal favorite by far, and it's something I wish everyone knew about when they start investing, which is there will always be a smart sounding reason to sell. Whether it's a recession, a global conflict, interest rates going up, a currency crisis, or a YouTuber telling you to buy or sell something because they found out something from someone that this time is gonna be different. Remember that line, because when they say it, it's gonna sound so convincing that you'll almost always wanna do it. Like take right now, for example. We're going through one of the most crazy, volatile, and drastic times in human history, where we're getting these new currencies and crypto that might replace banking, a new superpower that might replace the dollar, and it sounds brilliant when you say it that maybe that's how the stock market this time will actually be different. But history shows that is never the case, so I would ignore it. Here's another little nugget. The longer you stay invested in the market, the more you increase the odds of making money from it, until you increase the chances to 100% chance of making money if you stay invested for 20 years or longer. Now, it's not gonna be a smooth ride to get there. In some cases, the stock market's given people no returns when factoring inflation for over a decade. But if you stay invested for 20 years or more, you will have made money. Now, let's talk about Voldemort for a sec. And by Voldemort, I mean politics, because politicians have a lot less to do with investing returns than people like to make it seem. And that's because the world economy is way bigger than any politician's influence on it. It just is. In the long term, it doesn't matter whether it's Democrats or Republicans in power, the stock market tends to go up. So don't let the red and blue stripes distract you from your goal. And while you're at it, I would also ignore professional stock analysts and economic forecasts because those are almost always wrong, and they're wrong by a lot. And that's why I don't care to make my own predictions or tell people what to invest in or even have opinions on these things, because what I think doesn't matter. What matters is the truth, and the truth is in the data that I just shared with you. And ultimately, start investing as early as you can, because the earlier you start, the faster you can get to that 20-year mark and beyond, and hopefully make millions. If more people knew about these simple truths, they'd make way more money and live a lot more stress-free lives. So if that helped you out, share that with a friend, and hopefully that helps them out as well. As always, have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab up to $250 worth of free Bitcoin right here. Please don't forget to not keep your crypto online. Get the money while it's still there. Take it offline, put it on a cold storage wallet, and keep it safe, keep it secret. And in the meantime, go grab your free stocks. Links are down below, and then go track them automatically with a spreadsheet link down below in my Patreon. Love you. Thank you so much for watching. I'll see you back here on Monday and Friday, sometimes a Wednesday. I'll see you soon. Bye-bye.